Investing can feel complicated, especially if you've never done it before. I started investing 5 years ago and I made so many mistakes, but I also learned a lot. If I could go back in time and start again, here's exactly how I'd make my first investment in 2025 step by step. This is not financial advice, just educational content based on my personal experience. So let's get started. The first thing you need is an investment account. In the UK, we don't just buy stocks directly. We use a brokerage, also called an investment platform. There are quite a few options, but I personally use Trading 212. That's because it has low fees, which is super important when investing because fees can eat into your returns. Plus, I find it pretty user-friendly, so I think even beginners can navigate it pretty easily. And last, you can start with just £1. So no pressure to invest huge amounts at once. To sign up, you'll need your national insurance number if you're in the UK and a form of ID like a passport or a driver's license. This verification process is pretty normal for any financial institution. You'd be asked to provide the same details if you opened a bank account, for example. Once you've signed up, you'll see a form called the W8BEN form. This sounds scary, but all it does is reduce tax on dividends from US listed stocks. Normally, the US government takes 30% of your dividends in tax, but the UK government negotiated a lower tax rate for people residing in the UK. By selecting the I am eligible under the treaty with United Kingdom option, the 30% that the US government usually takes is reduced to 15%, meaning you keep more of your money. Now that your account is set up, let's choose the right type of account. This is really important because the type of account you pick will determine how much tax you pay. Trading 212 offers 3 types of investment accounts: an Invest account, a CFD account, and a Stocks ISA. They also offer a cash ISA, but that is a savings account, not an investment account. Now, we're going to ignore the CFD account because that is for traders, and we are not traders. We are long-term investors. If you're in the UK, the best option for most people out of those 3 accounts would probably be the Stocks ISA. That is because it's tax advantaged. You don't need to pay any tax on gains or dividends that you make from your investments. You can invest up to £20,000 per tax year in an ISA, but your investments can grow however much within that ISA. There's basically no limit. Now, if you've already maxed out your ISA allowance or you're not eligible because you don't live in the UK, then you can go for the Invest account. However, you should keep in mind that when you get dividends or when you sell investments at a profit, those dividends or that profit might be liable for tax in an Invest account. Okay, time to add money to your account. You can deposit funds via bank transfer for free, or you can use a card payment. But be aware that after £2,000, card payments have a 0.7% fee. So if you're planning to invest more than £2,000 over time, sticking to bank transfers will save you money on fees. There's also the option of an instant bank transfer where you connect your bank account to Trading 212 through open banking. I personally use it so that my money is deposited immediately and I don't have to wait 1 or 2 working days for it to get processed through a normal bank transfer. But I totally understand if you're not comfortable with that. I just thought I'd mention it. Also, I've got a quick bonus tip. If you use promo code SNSBonus, you'll get a free fractional share worth up to £100 when you sign up to Trading 212 and deposit £1. This is an affiliate code, which means that we get a small commission if you use it, but it helps support the channel and lets us keep making free investing content for you. Now comes the part where most people get stuck. What do you actually invest in? There are thousands of stocks out there, but for most beginners, individual stocks can be risky and require a lot of research. That's why some people choose something called index funds or ETFs. These are baskets of stocks that track the overall stock market. ETF stands for Exchange Traded Fund, by the way, and it just means that specific fund trades on a stock exchange and behaves sort of like a normal stock. By investing in a fund or an ETF, instead of picking one company, you're investing in hundreds or even thousands of companies at once. This can reduce your risk a bit because it spreads your risk amongst many companies at once. However, do bear in mind that even index funds or index ETFs carry risk, as does all investing. It is that very risk that gives investors a higher potential return that savers get, for example. But that is over the long term. Most experts recommend leaving your money invested for at least 5 years, but ideally much longer. Another great way to reduce that risk is to invest regularly, such that if the stock market goes up, great, it means your investments are going up. But if it goes down, and sometimes it will go down, then you'll be able to buy at a lower price, so you get a bit of a discount, which again is great. Now, to find these index ETFs in Trading 212, here's what you do. First, you tap the magnifying glass at the bottom of the screen. Then you scroll down and select ETFs. You tap equity, then benchmarks. There are a lot of options out there, so do your own research and make sure what you pick aligns with your goals. Here are some examples of popular ETFs with investors on Trading 212. There are ETFs tracking the S&P 500, a popular stock market index which tracks 500 of the largest companies in the US. For example, the Vanguard S&P 500 ETF or the iShares Core S&P 500 ETF. Then another popular type of ETFs are global ETFs, which track the entire world stock market rather than just the US. The US still makes up over 60% of these global ETFs because right now the US has the strongest stock market in the world. But importantly, if this changes and the US market starts doing badly compared to other countries, then a global ETF would automatically reduce its exposure to the US. Some popular global ETFs include the Vanguard FTSE All World ETF, the Spider MSCI All Country World ETF, and the Invesco FTSE All World ETF. Another thing to note is accumulating versus distributing ETFs. Accumulating ETFs automatically reinvest your dividends, helping your investment grow faster. Distributing ETFs pay out dividends as cash, which can be useful if you want passive income. Most ETFs, not all, but most, will have both versions. For example, the Vanguard FTSE All World ETF with ticker symbol VWRP is accumulating. But there is a distributing version of the same ETF that has the ticker symbol VWRL instead. Alright, let's go ahead and actually buy an investment. First, you want to tap on the ETF or stock that you want to buy. Then you want to tap buy. You'll see there the type of order that you can make. I don't really bother with limit orders or stop orders. You can if you want to, but I keep it simple. I do market orders, which are executed at the market price currently available. Then you want to enter how much you want to invest, for example, £100. And you'll see there how many shares that amount will buy you of that specific stock or ETF. Trading 212 allows you to buy fractions of shares, which means that you could buy 1.2 shares of something or even 0.1 shares. That is why you could even put that you want to invest £1 in there, and it would just buy you a fraction of that share that is worth £1. After that, you tap review order, you look at the details to see that they're correct, that you didn't put an extra zero in there or something, and finally you tap send buy order. And that's it. You'll get an order confirmation, and once it goes through, your investment will appear in the portfolio tab. Oh, by the way, sometimes the order wouldn't be executed straight away because the stock market might not be open, so bear that in mind. And that's exactly how I made my first investment in 2025. To recap, the steps are: 1. Open a low-fee investment account. 2. Choose a tax-efficient account like a stocks ISA. 3. Deposit funds. 4. Buy an investment that aligns with your strategy. And 5. Hold for the long term. If you found this helpful, like this video and subscribe for new videos every Wednesday. Thanks for watching, and I'll see you next time.